What is Nifty and Sensex? If you understand one, the other one is also the same. So let's understand Nifty first. So friends, Nifty is a market index of the National Stock Exchange, NSE, consisting of top 50 companies of India. So National plus 50 is equal to Nifty. So it is basically a group of top 50 companies of India from various sectors such as IT, banking, automobile, FMCG, etc. So there are some 13 to 14 sectors which form part of this Nifty 50 group. And some of the companies of this Nifty 50 are like Reliance, Infosys, Asian Paints, Britannia, etc. And it is not that only these 50 companies, these same 50 companies will always remain in the Nifty 50. No, it is not like that. Every 6 months, rebalancing of Nifty is done based on the performance of the companies and various other parameters which are taken care by NSE. And some companies come into this Nifty and some companies go out of this Nifty also. So the base year of Nifty is 1995. That is the year in which it was formed. And the base value of Nifty is 1000. It is not 1000 rupees, it is just one value, one number, 1000. And right now, the value of Nifty is somewhere around 14,000. So how does the value of Nifty increase or decrease? How has it come from 1000 to 14,000 now? So basically the value of Nifty increases or decreases based on the share price of the companies which are part of this Nifty. So if the share price of companies which are part of this Nifty increase, then the value of Nifty will also increase. If the share price of the companies come down, the value of Nifty will also come down. For example, if the share price of Infosys, Reliance, TCS increase, then Nifty will also increase because these companies are forming part of the Nifty. And similarly, if the prices of these companies come down, Nifty will also come down. So what is the purpose of Nifty? Why was it formed? It is an indicator or a benchmark in the stock market to measure the performance of the stock market. Okay, and why only 50 companies are there? So if you see friends, there are around 6,000 plus companies in Indian stock exchanges which are listed in stock exchanges in India. But out of these 6,000 companies, how will you measure the performance of the stock market? So hence these 50 companies of Nifty have 65% market share in the volume and the trading of transactions which happens in the share market. Hence you can say that these 50 companies are kind of an indicator of the entire stock market, because these 50 companies are from all the various sectors of the economy, and also they are having high volume and trading transactions. So we also have sector specific Nifty also, like Bank Nifty, IT Nifty, FMCG Nifty, which consists of only companies of that particular sector. So now I hope you understand what is meant by Nifty and how does the value of Nifty go up and go down. Now coming to Sensex. Sensex means sensitive index, and it is an index of Bombay Stock Exchange BSE. And Sensex has only 30 companies, and the base year of Sensex was 1978 and the base value was 100. And the value of Sensex also increases or decreases similar to that of Nifty. So both Nifty and Sensex are good measures of the stock market performance. Both are same only. There is not much difference between the two. And both Nifty and Sensex both together go up almost at the same percentage, and both when the market is down, both come together down at the same percentage. So whether you track Nifty or Sensex, both are equally the same. So I hope now you understood what is meant by Sensex and Nifty. Thank you.